Welcome everybody, Mike Smith here, and look, it's an interesting week so far. We've had stocks chopping up and down as we sort of predicted in previous videos, and yesterday we had Fed minutes which really sort of were probably slightly more hawkish than anticipated, and of course we had the market sell off subsequently after their release. And of course, the financials did very well on the back of that and spiked up from 2 o'clock onwards. And MS, we see in front of us, Morgan Stanley, is a typical example of that. And you'll see this really quite textbook double bottom formation here on Morgan Stanley plus other banks, JPM, Bank of America, all similar looking charts. So I just thought it was worthwhile really talking about why we potentially shouldn't enter this. And really, if we look at Hawkeye, there's quite clear signs we're still in downtrend, although that's pointing up. That'll probably move back to congestion in the next session if we hold anywhere near this 27 level. We are still seeing selling volume, although last night will turn green, and we are still got a red heat map. So really, we've been in congestion on the weekly chart. There's no long entry obvious there until, of course, we break 28 on the upside. If we break 28 on the upside, then we may be interested in a straight bought call. But of course, the market itself is not lending itself to directional trading at all. So how else may we play this? Well, we could look to enter perhaps a 25-26 bull put spread with short duration, less than 2 weeks. Or we could look for, probably my favorite trade of this is look for perhaps a butterfly, using 27 as our base, being the pivot high we saw there that it broke through last session, providing we move up from there. Maybe a 27, 28, 29 butterfly, again with 2 to 4 weeks expiry, would certainly be consistent with the fact that the weekly chart is in congestion and trading within this range of $26 to $28. So that's one thing that's on our radar, but we are being very cautious in this market right here, right now, and would really advise that you look at perhaps position sizing lower than you would normally do. So beware the banks. If you are going to enter trades, think about position sizing in a high risk market. And that's just one of the trades I'm considering for today. So before we go, if you'd like to see everything I'm considering and see the trades I'm really taking, why not take a trial to my Options Elite alert and trading service? That way, you can see exactly how I find the best trades that can produce the largest returns whilst keeping the risk low. Just click on the link below and get started today. You'll be glad you did. See you soon.